Hello, this is Jordan, and in this video, I'm going to discuss when silver will begin to outperform gold. This video is being recorded on the late evening of Tuesday, April 21st, 2020. Thank you for joining me. First, let's recall what the drivers of gold and silver are. For precious metals as a whole, the fundamental driving force is declining real interest rates or negative real interest rates. Now, when we look at gold and silver separately, economic weakness, the Fed shifting to rate cuts, fears about recession, all of that is best, relatively speaking, for gold. And then the large gold miners, the senior gold miners, we can also throw royalty companies in that group. Now, the other thing that can drive negative real interest rates is you have a rise in inflation and inflation expectations. Now, that trigger is what is needed for silver to outperform gold. And that's why we haven't seen that happen yet, because in the last couple of years, it's been a rate cuts, economic weakness type of catalyst for the sector. And that's why gold royalty companies and the large gold stocks have outperformed. Now, if we look at historically the points, and I should do another video and go more in depth on this, but historically the points when silver has outperformed gold go back to the Great Depression. Silver didn't really start to outperform until around the time the stock market bottomed. You go back to the early 2000s. I was just checking this, but the silver to gold ratio, so that did not start turning up really until 2003. Now, the bottom in the sector was at the end of 2000. That's when the gold stocks bottomed. Then in early 2001, that's when the gold price made its double bottom. Now, with respect to silver stocks, I just checked, and the 4 or 5 largest silver stocks, they really started to outperform at the end of 2001, really when 2002 started. Now, commodity prices as a whole, I think they bottomed in late 2001. So the timing is different every cycle, but that's just something to keep in mind. And let's go back to the end of the last cycle, or the beginning of the last cyclical bull market, which was late 2008 to 2011. And in this chart, we're looking at some ratios and also some measures of inflation expectations. I mean, industrial metals, the 10-year yield, TIP versus TLT, the inflation protected bonds against bonds. That's a marker of inflation expectations. But what happened at the turn of this cycle, or during the financial crisis, the bottom for the sector was basically late October 2008. Now, silver began to outperform gold in earnest and sustain it. That happened at the very end of 2008. So there was a lag of 2 months or so. And we can see, if we look, that was around the time when the 10-year yield bottomed, and when TIP versus TLT bottomed, and also, what am I missing here? Also when the 10-year yield bottomed. I may have already said that. Industrial metals, they bottomed in mid-December, so not quite at the end of December. Another thing is also the dollar. A falling dollar, I think that's probably going to benefit. If it lines up with these other things, a falling dollar is going to be more of a benefit to silver than gold, because that's going to raise inflation expectations. So there was a lag of about 2 months. Now, here is where we are today. Now, at the top, we have TIP versus TLT, we have the 10-year yield, industrial metals, and then we have the silver-gold ratio. I mean, you can see that, the first three, they're pretty much in line with the silver-gold ratio. So the silver-gold ratio bounced, but now it looks to be weakening, maybe rolling over a little bit. So it's possible that could, it looks more likely than not it's going to retest the low. So that doesn't mean that silver and the silver stocks won't rise if gold and gold stocks continue to rise. We're just looking at, relatively speaking, silver against gold. So we're not quite there yet. I mean, I don't know if it's going to take a couple weeks or a month or a couple months, but the point is we're not quite there yet as far as expecting silver to outperform gold. These are the ratios to keep an eye on. And, when they confirm some kind of a bottom or they start, rising in earnest, that is going to be a good signal that inflation expectations are starting to rise. Until that happens, silver is probably going to underperform gold. So keep this all in mind. Thank you for listening to this video. I really appreciate it. I hope you all learned something. I hope it was informative and educational. You can follow all of my work at thedailygold.com. I give away a lot of free info there. Check out my premium service at thedailygold.com/premium. Hit the like button, subscribe to my channel. And thank you again for listening and watching. And I look forward to publishing another update for you in the days and weeks to come.